Is there such thing as a bullish pullback? I'm going to show you what that is and what makes pullbacks more bullish than other pullbacks, and why the expectations for stocks continue to point to the upside despite risk events, news headlines that can sway investor sentiment and have shown to sway investor sentiment. So I'm going to break all that down and what our expectations are going forward. I'm also going to break down what's been driving the biggest driver of this price action today and for the past week, how that's been impacting different assets, and how we can take advantage with in one way here today. So let's go ahead and get started. Today is Wednesday, August the 22nd, 2018. This is the Market Outlook from MarketScholars.com. My name is David Settle. Thank you very much for tuning in tonight. Welcome to those of you who are watching us for the first time. Glad you found us. Keep coming back for more. Subscribe to our YouTube channel. Mouse over our Market Scholars logo right here in the bottom right corner of your video. Click that red subscribe button that pops out. Also, click the thumbs up icon that's down below this video. That lets me know two things. You like the video tonight. You want me to keep doing these. Me and Brandon to keep doing these videos. Easy way to give us feedback. Comment on anything that stands out to you. We'd love to hear from you in the comment section down below. Join our daily Market Outlook email list. Easy way to do that. Click the link popping out in the top right corner of your screen. That will subscribe you. Also, follow me on Twitter for more content like this throughout the day, and join our Market Outlook community on Facebook. All right, well, let's take a look at the S&P 500 first off with the market forecast indicator. And you see a little bit of a down day today, down a point. Very flat day, especially considering the news we had after the market closed and actually going into the close and afterwards last night. You can see the intermediate line stayed bullish. The near-term line continued to fall, but stayed in the upper half of the chart. So that's now 1, 2, 3, 4, 5, 6 days. Excuse me, the near-term line has been above 50, and the expectation is 7 to 12. So one more day. The momentum line dropped into the lower reversal zone, but not to an extreme low. So that would, the combination here of this oversold momentum line and this green line suggests a short-term bounce. A trade is called a bullish intermediate confirmation signal. Considering that we're only 6 days into a near-term run, that we haven't pulled back much, so it's not like we're going to bounce up to a new 7 to 12 day run. But there's the possibility, again, purely based on the technicals, right? I mean, barring any unexpected news developing, but purely based on the technicals, we would expect this near-term run maybe last another day or two, the rest of this week. With this short-term bounce kind of giving us a lift heading into tomorrow. We could continue down a little bit, and that might bring the near-term line down below 50. And if we do get that combination of another day of oversold momentum line with the near-term line now below 50, now we're talking about the possibility of a bounce up to a new 7 to 12 day near-term run, because in that case, the near-term line will have pulled back. Where it hasn't yet. So if it bounces up tomorrow, which is what you'd expect on the signal, then we're looking at maybe another day or two, because we're already 6 days in. The expectation is 7 to 12 days for the blue line to be above 50. So in other words, short-term bullishness may be kind of flirting with all-time highs again on the S&P before we get more of a near-term pullback. Is kind of what we're looking. You can see market sentiment's rising, but just barely at 77.40, so it's mostly flat. If you look at the Dow Jones Industrial Average, it had more of a pullback today, a little bit of an engulfing pattern there, and its momentum line did fall to an extreme low, and its near-term line did pull back below 50 after only being above 50 for let's see. That would be in there 1, 2, 3, 4, 5 days. So it didn't make it to 7 days. So that might be a little bit of a precursor to that the S&P might be a little bit more weak. We might get another down day. This might be the near-term pullback. We have already flirted with the all-time high in the S&P. Now we might get another day or two of weakness before bouncing up more. That's what the Dow would suggest, right? Look at some of these others. The NASDAQ, which has been lagging, really bouncing up today. So those NASDAQ stocks, you see the intermediate line, the intermediate run never ended. So the intermediate line never dropped below 50. We never did get the dark pink shading. The light pink shadings typically are just near-term pullbacks, right? It's the dark pink shadings with the red line on the moving average. That's when you're concerned about more of an intermediate pullback. And then you start comparing. So here's our last intermediate low point here with this low point. Where are we going to bottom out the next time we have an intermediate low compared to that low? As long as it's higher, then we continue to expect more intermediate runs during this market sentiment rally that we're on, this long-term 6 to 9 month rally. And then finally, you look at the Russell 2000, did get a new all-time high again today. So its intermediate line did get above 80 again. So back to a strong bullish posture after breaking out of this sideways triangle that we've been looking at for a while here. Its near-term line's easily in the reversal zone, the momentum line. So while the Dow would suggest maybe we are getting the near-term pullback right now, the Russell and the NASDAQ would suggest that we might bounce on the S&P 500 right away and continue this current near-term run for another, like I said, day or two, maybe even up to that 12 days before we get more of a near-term pullback. Because see, the near-term line just got above 50 on the Russell. It's this is what, because we had that long lower shadow on that day, that one got you to 46. So this is day number 4 on the current near-term rally. That's a strong one because the near-term line getting high up into that upper reversal zone there. Okay, a quick reminder here, if you're watching our markets outlook video on marketscholars.com on our blog, remember you can participate in the forums for tonight's market outlook video by clicking on this link. Remember, you have to subscribe to our site to participate in the forums, where you can comment and question on tonight's video and anything we talk about. Make sure you click over here on this button that will subscribe you or take you where you can subscribe, and you can do that for free. Remember, we asked for 3 clicks. If you want us to keep doing these videos, 3 clicks, that gives us your feedback. You can do it right now while you're watching. Just scroll down below the video here. Click on this heart that will like tonight's Market Outlook tweet. Click on that like button there. Also, you can click on that image, the Facebook image with the Facebook thumbs up. That'll take you to your Facebook page where you can click on this like button. Remember, you can also comment or share it from there. Some great comments from the last post. Thank you very much to Gerald and to Deborah there. And then, of course, the third click is to like it right there. So 1, 2, 3, that lets us know that you like the videos, that you want us to keep doing these. All right, as we look at the long-term chart, you can see, again, we continue to move higher above a rising 50-day moving average, which is also rising above its rising 50-day moving average, so everything rising. The 50, the 200, and the gap between the two is all getting bigger. The price staying up above 2 and going up to a higher close. So, again, continuing to be as bullish of a long-term chart as you can get. And then finally, you look at the 3 green arrows on an intermediate basis. We're back to having a shaded green chart here like we do on the market forecast. We got 3 green arrows again. When you look at the 2-line versions of those charts, both lines above their moving average. So the MACD itself isn't quite, and you can see the MACD has been diverging. So, unless we get back up into the 20s or high teens on the MACD, to get a lower high where we're already at a higher high, that would be a divergence heading into a resistance. Now, that's not a very strong resistance. As you'll see on the, the volume chart, there's not much volume up here. There's a lot more volume down here. So there's not much resistance here, but we're getting some that may cause eventually an intermediate term pullback by the time we can load up for another multi-month run up through that resistance and then actually hold it, getting the new all-time highs. You can see on the intraday chart, very small range, just over a point. So lower high and a lower low, coming back into last week's high point. So there's some intraday resistance or support here. It's not, of course, it's intraday. It's not super strong, but you can see why we're kind of stalling here, why we're not, dropping dramatically like we were actually for a little bit of time last night. If you look at the volume, very light. Again, a little surprising after such a big news overnight coming out that doesn't really impact stock markets directly, but can impact sentiment, and was impacting sentiment on an overnight trade. ultimately very, very light volume, 45 million. It is a reminder that we are in August and it's the end of the summer and that we're heading into Labor Day weekend. Not this coming weekend, but the next. And this is what happens. This is what happens when we head into the end of the summer. Very low volume moves, even with big news events. So, and you can see too when I look at the range here on SPY, you can see that just under just over a point, so well below the average. And then we saw the 45 million shares trading hands. 45 million is well below. It's below the average, but way at the bottom end of the 52-week range. Just over a point. It's right here again, below the average, well below. So I mean, those are our pullback days. I mean, these are the pullback days that we're getting on a near-term basis, at least, to give us that bullish intermediate confirmation signal. That's great. ATR on a relative basis still below 1%, so that's still bullish territory. We still haven't really crossed above that 1% threshold yet, which again, the price here would be at 2.86 is where the ATR would need to get to. That average ATR would need to get to, and we're at 2.03. So we've got a long ways to go before we start getting more consistently bearish moves that would start to lead to more of an intermediate or even more of a long-term pullback again to get that market sentiment line back down. So all good signs. They're slow, they're boring, it's grinding, but from a bullish standpoint, this is the kind of grinding we get. So it's good signs. Volatility continuing to grind itself lower on an absolute basis, and of course on a relative basis, you're almost back to those extreme lows again, where we got to a few weeks ago. That prompted this kind of mini spike, but this kind of shows again how much complacency there is in the markets despite risk events, trade talks, factors, political factors affecting the administration and their potential policies. The FOMC with minutes coming out today. I mean, all these risk events and complacency is pretty darn high right now, according to what the volatility, which is bullish. I mean, it's bearish when you start to get the spikes, and we're not anywhere near yet where we get the spikes, nor are we near extreme complacency, where we'd start to worry about the possibility. And we can be extreme for a while, as we saw last year. Complacency can stay high absent of any market moving news that can push that volatility higher. All right, so to summarize, the markets still maintain a bullish trend. There has been a little bit of short-term weakness here on low volumes and small trading ranges. And really, if you're going to maintain a bullish trend, then this is what you like to see in your short-term pullbacks. Really small ranges. It's the bigger ranges, the bigger moves. Those are the ones that you worry about turning into more than just a near-term pullback. So, and right now it doesn't even look like this will turn into a near-term pullback. The NASDAQ and Russell would suggest that we might still have a few days left in this current near-term run. That on the S&P has only been 6 days old. So we'll see if it ends up getting to double digits by the end of this week or close to it by the end of this week, with an expected bounce up heading into tomorrow. Now, granted, anything news-wise that comes out can throw all that out the window, but just simply looking at the charts, that's what we'd expect heading into tomorrow. And of course, Jackson Hole tomorrow and any outcomes from low-level trade talks coming out tomorrow or coming out by the end of the week as well. So what do you think? I'd love to hear your thoughts, or do you agree with that? Do you disagree with that? First, click that poll that's popping out in the top right corner of your video there. Click that link. That will open up a poll. One answer, just click either agree or disagree. But I'd love to hear your thoughts. So scroll down and comment down below on what you're looking at or what you're thinking. Comment in our Market Outlook or Market Scholars forums. Either way, if you're more bearish than this, or if you just happen to be more bullish than this, would love to see what you're looking at and share your thoughts with the rest of the Market Scholars community. All right, let's go ahead now and take a look at what's driving the price action today. And you can see we had a few things on the economic calendar. First, you had existing home sales that came in a little bit below expectations and below what we had last time, though the year-over-year number improved. Year-over-year change had dropped to 2.2%. So slight improvement there, down only 1.5%. But still, slowing growth in the home sector. That's been a recurring theme here lately. Petroleum, you'll see, had the biggest impact today. A drop in crude oil inventories, pushing down, continuing to push this down. That had a big jump up higher in prices. We'll take a look at here in just a second. And of course, the FOMC minutes came out today. And the chatter was that we'll continue. I mean, the odds of a rate hike in September are close to 100%, and that that continues to be the case. Jumping up a little bit more from what it was the day before, and even in December, the odds jumping up again for more rate hikes going forward. So the odds of continuing to get these quarterly rate hikes are still there, no matter what the administration would say in terms of influencing them to do otherwise. And so, I mean, that's not, as we've seen before, that's not a bad thing. That's this, and I've said this before. I've said this in my classes that I'm teaching at Market Scholars that I'm actually more worried if they stop raising rates, because they would stop raising rates because they feel like the market can't handle it. The economy can't handle it. Remember how low interest rates are and what the yield is doing. So if they stop raising rates, not necessarily the best sign. In fact, over the last couple of weeks, so I've changed the 3-month return column here to a 2-week return. And you can see over the last couple of weeks, bonds have been your better performers, and they continued up today. And it's interesting to have small cap stocks up there. As this is supposed to be a limited, right? This is supposed to be a very narrow market with FANG stocks pushing all the returns. The reality is, I mean, look, you can see over the last couple of weeks, your mid caps and small caps and dividend stocks are your better performers. Your S&P 500 is flat over a 2-week period, and none of those have FANG stocks. You can see investment grade bonds doing okay too. Your high yields aren't doing as well. But your investment grades are up. But crude oil is our biggest mover, up 3% on that inventory data. It was way down here in terms. Now it's up 0.6%, but because of a 3% return today, it was way down here, along with emerging markets and international developed markets, commodities, gold, and all of those are our big winners today. So, with more continuing weakness in the dollar, as you see here, the pullback going on in the dollar, that is pushing commodities and crude oil and gold off of their lows. Now, considering off their 3-month lows. So neither one of these are breaking trends anytime soon. The crude oil still got a strong bearish posture, and gold has got a weak bullish posture, but still below a falling moving average. And again, coming off those lows. So, we're not in any kind of threat here of changing these trends yet, and looking at these moves as anything more than just a near-term pullback. You can see dividend stocks pulling back down today, so they had been a good performer over the last couple of weeks. So, giving back some gains, the gains kind of rotating from up here down to down here with these commodities and other ETFs or other asset classes that are impacted by a falling dollar, which is what we've had essentially for the past week. Right? If I were to change this to just a 1-week return, right? So if I were just to go to a 1 week here, then you'll see, again, that's about how long the dollar's been falling. So there's your dollar down the weakest performing asset class over the past week. And you can see, look at your emerging and developed markets taking advantage. Crude oil up there as well. Again, most of that coming today. Small cap stocks, mid cap stocks, there's your commodities, also most of that coming today. Value stocks holding up well, dividend stocks giving up some gains, and there's your S&P 500 performing above all these bonds. And not that they were down, and you can see TLT Here's TLT here. If you take a look at a long-term chart of this, let's see here. There we go, TLT, and we'll take a look at a daily chart. It's kind of up against some resistance. Yields have been pulling back, and bonds have been rising, but bonds are meeting up against some resistance here, kind of trading in a sideways range. So we'll see, it's got a strengthening bullish posture. That intermediate line's rising at 68, but it's not, it's not trending higher yet. So I wouldn't put a whole lot of stock into that falling yields narrative. But the short crude oil, or the crude oil narrative, that move that we're getting, let's go back to a little long-term chart here. You can see it's coming up off of a low point. Again, it's not trending higher anytime soon. You are breaking above this kind of downward sloping trend line that you would draw right here. So that's a nice breakout move. And you can see short-term sentiment looks a lot better than it has in a while, but still very weak. We don't even have a weak bullish posture yet because it's still below 20. So again, I wouldn't put a whole lot of stock, but it's better. It's stopped the bleeding. It held support. It stopped the bleeding. At the very least, you would expect a move towards the top end of this range. So up in here, if I were to look on a price basis in that 72.5 range, this is where we expect crude oil to go. As we take a look at the currencies, because this is a dollar story, you see the dollar dropping across the board, but the euro is the one that's taking the most advantage. It's up 2.5%, whereas the dollar is down 2% in the last couple of weeks. There's your British pound also benefiting. Remember, they're coming up off of oversold clusters, and still on pretty bearish downward trends. Same thing with the Aussie and the Kiwi. There's your Australian dollar, the Chinese yuan bouncing up a little bit. Then there's your franc that you would expect to kind of match the euro and the pound. Your Canadian dollar here, the dollar's been pulling back against the Canadian dollar, but it already had been. So the Canadian dollar's been relatively strong. Same thing with the Japanese yen. So they haven't benefited as much, but they weren't down as much against the greenback either. If you take a look at how these markets are doing here, again over the last couple of weeks, or last week that the dollar's been down, you see China has benefited the most, but here's Germany, there's Korea matching China, there's France, India continuing strength. So India has been a relative performer, a strong relative performer, continuing that. There's your UK and Japan and Canada, which again they haven't fallen as much against the dollar, so they have less to gain on these kind of snapbacks. But look at China bouncing off 3-month lows, and Japan and Germany and all of these, France and UK all bouncing off of 3-month lows, but still on relatively bearish trends, weak at best, weak bullish postures. It's the India here that's got the strongest bullish posture now, aside from the U.S. out of all of these, and Canada is the only other one that's up above 50 on the intermediate line, bouncing back up today too. You can see just looking at today's move, Brazil, coming off another oversold cluster at a 3-month low again, and then Canada, your best performers, come North American. There's the prospects for that North American, with Canada and Mexico, the trade deal going through, having a benefit on the Americas ETF, especially considering how oversold Brazil is. And look at Russia. Russia is the only one that's not bouncing. It's your biggest laggard. Italy too. It bounces up a little bit, but both of those are still showing strong bearish postures and not able to get going here. When you look at the sectors and how they're doing, here we go. You can see your best performers today was energy sector, coming in with that strong move, the strong bounce in here. I don't know why that I have two materials down here. You have energy and materials, coming off a strong low point, oversold clusters on the energy sector, but that strong move in crude oil helping benefit that sector. The materials is the only other one that's really not trending higher. Those are the only two with moving averages that are not green. See, the Energy is red, coming up off those clusters, and materials is flat here with a yellow, kind of a red, alternating red, yellow, green chart. So, this telecom, you can see that over the last 2 weeks, aside from telecom, healthcare and discretionary are your stronger performers. They continue to show strong trends and strong intermediate postures. In fact, all of these are all sorted according to Brandon's sector selector tool as your strongest sectors, and they're showing strength. These two are the only ones that are not pulling back. You can see utilities, real estate, staples all pulling back during this quote-unquote market pullback. So again, another sign besides the small ranges and small volumes that this little quote-unquote market pullback is actually a pretty bullish pullback. And that brings us to our trade idea of the day. In that energy sector, this stock in particular, Marathon Oil, it's a relatively cheap stock. You can see its intermediate posture is weakly bullish. Market sentiment's falling, but now is below the 50th percentile. And here just a few days ago, we had broke down. So earnings had come out. We had broke down below 20, thinking, okay, this is, that's bearish. But when you get a breakdown that doesn't hold, in this case, a support breakdown that doesn't hold, those are actually more bullish than support bounces are, because you kind of shake out a bunch of weak hands here with that breakdown, and then we pop right back up above. And so that's actually a good bullish sign when you get that kind of a move, those false moves. You can even look at false breakouts to the upside as being more bearish than resistance bounces, even though that was a kind of a doji up there. And really, that was a nice solid breakdown that just didn't hold. The momentum line dropped to oversold levels. Very good sign. But we've bounced up ever since, and now have closed up above, the past couple of weeks highs here. Very good sign from a market forecast perspective. Remember, it's that crude oil price bouncing off of its lows that's having a positive impact on the sector. You look at the 3 green arrows chart for Marathon, we didn't quite get three green arrows, so this isn't a stock that I want to necessarily buy, but you got 3 green arrows with average volume at the very least. So again, if it can stay up above this support after a failed breakdown, that's kind of what we'd want to see. If you look at some other charts, you can see how weak the trend is with the DMI. Here, MRO, it's positive lines trying to get up above 25. It got up to, it did get up to 24.86, so it got pretty close. So a good sign after having the negative line up above 25 for so long. And you can see the ADX is actually up above 20. So again, and that false breakout was supposed to start a new trend, and it didn't hold. So a good bullish sign from a contrarian perspective there. And then you look at McDonald's here, and you'll notice, again, we had the volume profile, a vacuum of volume here. We could have easily come down to 18, which is probably what would have been expected. And again, we didn't. So we're back up into this range. Now there's some resistance in here, so it won't be easy to get through. But most of this year's volume has been in this area, and we're still trading towards the top end of this year's range. So a little bit more bias to the upside, and that false breakout helps support that. That move, that expectation. That's just over the last year. If you look at the last 6 months, you can see again we still had some range for this to drop down to get to the last 6 months range, and nope, we came right back into this area where we got a lot of volume to kind of keep us here. So again, bullish bias, but not necessarily a trend trade idea. There's opportunity to sell options. You can sell here at this 20.5 put. The delta is a little high, at 41 cents, but you get about 50 cents. That puts your break even, as you'll see, it puts your break even right about $20. You set that slice to the chart. Whoops. You set that slice to the chart here, and you can see basically you'd have to break down again for this trade to get to the point where we would take this $50 loss for a $50 gain. And as you saw with NVIDIA, I mean, we've done a trade on this video before with NVIDIA moving towards that level today and closing out with that kind of a loss. As bullish as NVIDIA has been, in this example, I don't want to take a $154 loss because it would take 3 of these trades to get maximum gain just to break even. And just a reminder in terms of what are the probabilities of getting 3 consecutive gains here, of maximum gains just to break even at 64% odds, then you can see, we're talking about a 26% chance that I can break even in my next 3 trades. So 4 trades, I break even with a 26% chance of that happening. All high probability trades. So that's why you want to avoid those big losses as much as you can. And then once you get about half of those gains, you can see it's a lot faster to get, up to that, half of those gains than it is to get up to that 25 mark, than it is to get the other 25. See how flat out it gets? So that's how you can kind of get in and out of these trades a lot quicker and manage them a little bit better and move on to other things, especially if the stock continues. If it doesn't continue to move and you don't get up to that half of, that half the gain, and it kind of stays in this area, okay, well, eventually you can see how the purple line just keeps moving higher, eventually until you get to your, close to maximum gain there. So if it moves and we can get to 50% quickly, great. If it doesn't move, it doesn't keep moving towards the top end of this resistance, and we just kind of hover and we can accumulate some theta, then that's another way of making money on this type of trade too. All right, so that wraps us up for today. Now it's your turn to tell me what you think. So click that link in the top right corner and comment on anything that I talked about in today's video. Do you have any questions for me? Do you have any questions about something I didn't talk about? Use the forums to be able to do that. And again, we have a very knowledgeable market scholars community. Some of them have been listening to these videos for years. So make sure you take advantage of that community there, of the collective knowledge of that community. Thank you very much for tuning in. Keep coming back for more, especially those who are new. Glad to have you. Remember to subscribe to our YouTube channel. Click the thumbs up icon to let me know that you like the video, and comment. Also follow me on Twitter for more content like this, and join our Market Outlook community on Facebook. Have a great evening, everybody. We'll see you all tomorrow.